bearish this market has become by the breakthrough $1,180 per ounce just in the last week or so. And so let's have a look at the chart and see what exactly this could mean for gold. What we're going to do is look at a couple of different time frame charts for gold. The first is a shorter term 4-hour chart, and we can see gold breaking through the $1,180 per ounce mark. Basically fell about $20 down to 1,161 and formed a range up to about the $1,175 mark. It has subsequently broken down through that range without even retesting the 1,180 mark, and we're now sitting around 1,140. So that's the short-term outlook, a downtrend obviously. Well, let's see where we are in the longer-term scope of things. For that, we're going to broaden our reach right out to a monthly chart. And what you can see here is what we potentially have on the cards here is a bearish pennant, whereby this big steep decline is the first pole. We've broken through what is essentially a triangle pattern at this 1,180 level. And so from there, we would actually project the length of that first pole down. And if it reached 100%, that would actually be $575 per ounce. So we're basically talking about a complete collapse in the price of gold should that pattern play out. Some levels to keep in mind before we get there, though, is that we have 1,040. That was the March 2008 high, and obviously sitting just above the key 1,000 psychological level. And the 1.618 extension, so not 100%, but more like 61.8% retracement extension, sits around $800 per ounce. So a few prices to consider here, way below current levels. Obviously these chart patterns don't always work out, but it's certainly something to keep in mind. So that's it for this week's CMC Markets Commodity Snapshot. We were, of course, looking at gold. Now, the big consideration, as mentioned, is the US dollar. Gold is denominated in US dollars, and that's really what's sealing its fate right now. If you look at a price of gold in yen, Japanese yen, then the price of gold is actually going up. That tells you something. So really, it's about Federal Reserve policy and the imminent rise in interest rates in the US. If that should suddenly start looking like it's not going to happen, or if it starts happening, but it looks like perhaps the central bank will go back in the other way and